Hello and welcome to my channel. Today I want to talk about what I think is the start of the bear market. I will be going more in depth in my analysis, covering the technical analysis of the S&P 500, the big tech stocks, and also revisit the target interest rates. So let me begin with the S&P 500. Now, if you look at this wave count, the black one is the Bambi wave count, right? And the overall big picture will be the cycle wave. So, if you have seen my previous analysis, you will notice that I didn't really change the wave counts here. Right? What changes is really the update over here since 16 July. Right, on the 23rd all the way until the 28th of July, I did warn of a market crash which happens at the start of August. Now, this market crash itself is now confirmed to be a wave 4. And since then, on the 5th of August, this wave up will be the wave 5 of wave 5, right? The Bambi wave 5 of cycle wave 5. Now, there is this target that you see over here that is around 5729. How do I get this target of 5729? It's actually the Fibonacci extension. So if I use this wave 1, this cycle wave 1, and project this from the bottom of cycle wave 4, and if we assume that wave 5 is equals to wave 1, we will get this target of 5729. Now also on this daily time frame, you'll see something that if you didn't take note, you might miss it, and that is this these 2 days on Thursday and Friday itself. There are two dojis on high volume, especially on Friday itself. This doji. Now, in technical analysis, candlestick study, right? Doji is usually the turn of a up move or a down move, and in this case, it is actually a up move, right? Of course, it can also be a consolidation, right? But for my short buyers, I would say that this should be the turning point. Now, this picture that we have seen already, let's look at the component themselves. If you look here, I have 8 charts, right? So I will go through them very, very briefly, starting from Apple. So if you look at Apple itself, you'll see that on Friday, right, Apple actually has a big uh, sell down on super high volume. This is the daily chart, right? So, and this itself, right, um, could be telling us that these two are the double tops, right? In this move since the August 5th, right? Because it's actually at the same price, right? The high meet on the 29th of August is the same high on the 20th of September, right? And this big volume tells us that the probability is actually high on the Apple going down some more. And every one of us know that the launch of the iPhone 16 itself is a joke, right? It really is that disappointing. Yeah, but I would like to talk mainly on the technical side. So let's move on to the Microsoft. Again, Microsoft itself, you see that it's not making a new high, right? And over here, I can actually say that this move could be a ABC. Okay. Similarly, on Friday, high volume. Let's look at Alphabet. Same thing, right? It's actually not recovering even to a previous high. I ignore this Elliott wave count because I did not update this, right? Let's look at Amazon. Even Amazon is very strong these few days, um, it is still not at the new high, right? In fact, this is probably the stronger of the Magnificent Seven, and you see this high volume here, right? If I look at Amazon itself without any bias from my previous analysis, I would say that this could be a buy, right? Because of the on the high volume, and it's a strong candle up, right? With a tail at the bottom, right? But if I have to do a quick drawing on the Elliott wave, I would say this could look something like this. And let's drill down to the bottom and to the lower wave count, right? This could be A, B, and a C, right? Where C itself is a 5 wave. Now, let's see whether we can find some relationship over here between wave 1 and wave 5, or the entire wave, right? So wave 5 is about 0.786 of this wave 1 over here, right? Or relationship here, but if you can see over here, I also noticed that there is a potential ending diagonal here, right? So this is when we drew in, and we notice that um, potentially the daily candle itself, right, this very strong bar could be a fake out, right? Could. So if just looking at this, I would say it's a long, but if I study it deeper, right, it's a short, right? Let me just display it here some more so that you can see this Amazon. And while you are looking at this, let's look at whether we can find any relationship between this, what I mentioned to be A, B, C. Right, there isn't too much of a relationship here, right? So we can throw this away. And from here, we know that there is no relationship over here too, right? It's just that it breached a little bit. So I'm really concerned with this discount over here on the hourly time frame for Amazon, and I would still say that this will be a short, right? So let's move on to Nvidia. Similar to the others, right? You can see that this is actually weaker than the previous stocks that we've seen, right? Mainly because it didn't actually move higher or even move up. Apple itself, remember, is actually at the same height as the around 26 August, end of August, right? But Nvidia didn't make it. Lastly, let's look at Tesla. Tesla itself is also on this corrective wave, which I could even say that this could be like a triangle, right? This is a corrective move up, and so I should expect that it should come down real soon. Right, so after looking at these component analysis, we want to look at these are all tech stock, right? So let's look at Nasdaq. Nasdaq itself also display the same behavior that we've seen like from Apple, where it actually hit the high, right, of last week of August, right? So let's try and look at and see whether there are some relationship. Now we can find that there is this retracement of 0.786 for Nasdaq, and this I can say that it will be a ABC. Now these are strictly not purely Elliott wave, because in Elliott wave, C wave will also usually be longer than wave A, right? But I find that in recent years, the relationship of in for corrective wave doesn't really hold true most of the time, Right. So what's important here is to look at Nasdaq versus S&P. Right. Nasdaq itself did not make a new high while S&P make a new high. Right. So this is one divergence that we are seeing. The other thing that we are also seeing is that all these supposedly leaders, right, in the stock market are not making new high, even though the index itself is making a new high, right? In the more traditional study of the stock market, you will know that when leaders are not making new high while the index is making a new high, it means that it's actually the start of a bear market. This also happened during the great financial crisis of '07, right? When the big names, the leaders are no longer making new high, right? In fact, uh they are like what we are seeing right now, right? They may have already started to come down, right? While the laggers actually move up. So this is kind of like a rotation, right? From the expensive stocks, the expensive and quality stocks, to the less expensive and cheaper stocks. And this also means usually that the retail traders are in, the more amateur traders are in, right? So and usually they do not they prefer cheap instead of expensive. So I mean in terms of price alone, right? So these are characteristics of the stock market. Now lastly, let's look at the 3 months yield, right? And the target interest rates. So for those of you who have seen my previous videos and analysis, you will know that I predicted a 50 basis point cut based on this 3 months yield. Now, the shocking thing about this is that the day after the Fed announced the cut of 50 basis point, immediately the next day, 3 months yield actually fall below the lower bound of 4.75. And on Friday itself, it actually fell to 4.672, right? So this means that there's at least another 25 basis points coming, right? And if I'm not wrong, going by how this yield is moving, it should move down very fast. And it may even trigger an emergency or unscheduled rate cuts that happen during the, I believe it was during this COVID period, right? March 2020, when there's unscheduled rate cut. So you might see the same thing happening again, right? Probably in October, right? If this fell too fast, right? Let's say it fell by another 75 basis point, right? We might see the emergency rate cut coming, right? And what will trigger this, as I mentioned in my previous videos, is that it could be caused by a market crash. As you know, right? What happens is that the 50 basis point cut in this week, right? Uh, happened when the S&P is making a new high, and this is not normal, right? What is normal is usually the stock market crash and there is a cut in the target interest rates to calm the market down. It's not usual when the market is making a new high and then you cut the interest rates. So I believe things will go back to normal. And if this is going to fall, it should mean that equity markets is going to fall and it's going to fall hard. So this is my reason for predicting that the stock market is already at its peak and it's coming down. So thank you for watching until the end. Thank you.